Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's September the 11th, and with us today is our regular Monday guest, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming to us out of Singapore. Now, Vishnu, as always, great to have you on the show.
Privilege is all mine, Brian. Great to start the week with you. As you can tell, my backdrop is a bit fuzzy, but really my argument is going to be the vision ahead is actually fuzzier. So that's where we
Okay,
start.
we'll start with something that's a little clearer first. The G20 happened over the weekend, and there were some interesting initiatives, including the Joe Biden and Modi plan to develop a network of railways and sea routes as a counter, of course, to the Belt and Road Initiative. Give us your take on this and also the takeaways from the G20 summit.
Sure. I think to keep it short, I'll say long in headlines, short in details, probably not much impact, at least in the foreseeable future. I think the foreseeable future will continue to be bucked by, the diverging interests, even within the G20. What's interesting to note is some of the key members of the G20 were also the members of the BRICS, where, some of the interests there were not exactly aligned to US interest. So we would say, at the end of the day, all these summits are perhaps going to be into maybe deepening multilateral relations to at least towards trying to hedge the obvious risks to demand in the economy. So everyone's trying to deepen their trade linkages, and some of these may not always align. And the big takeaway here is, the geopolitical tensions that will tug in many directions, and hence, inevitably at some point take away from aggregate demand. I think that is something we cannot sidestep because there's no clear path forward, and no defined, so to speak, winners in the game yet. I mean things continue to evolve. That's one thing. The bigger sense there is, of course, in the very near term. I think the G20 cannot escape all the demand uncertainties that dominate the picture.
So I want to focus now on what you just said, the near term itself. Inflation is probably rearing its ugly head, and that's particularly in the light of what OPEC is doing. What are the ongoing risks and where are the opportunities potentially?
I mean, that's really a great point, Brian. And let me just bring this in. Inflation is actually a price phenomenon, so prices rising really quickly. And I think what's worrying in our current scenario is it is not demand that's driving the prices. These are all supply shocks, whether it's self-induced in the case of the OPEC cutting supplies because they think demand is shrinking, perversely leading prices to go higher, uncomfortable ranges that may ultimately see a sharper collapse of demand and hence become self-defeating. That's one angle of it. The other is, of course, things that are well out of any policymakers or any human beings' control, which is things like El Nino, so on and so forth, that have led to very, very short supply of food, where you get countries like India scaling back on food exports, particularly rice exports, tit for tat kind of conservation of stockpiles of food. And so we see food inflation soaring. The real worry here, of course, the higher prices would impact many people, but the biggest tragedy would be segments of the world that cannot get access to food, and this will have a rippling effect, down the downstream, and you'll see. So rice will not just be rice. In so far, there's grain substitution. You'll also find feed prices going up, meat prices going up. So there could be a longer transmission of this, a wider transmission of this, and these will then add at a very crude level, no pun intended with OPEC and all, but it's going to add to headline inflation risks. On any ordinary day, a central bank would say, you know what, these are volatile components out of our control, not driven by demand, so we should ignore these. You might be able to say this in a textbook setting, but in a real world setting where you've got a strong dollar, a little bit of US exceptionalism when it comes to high demand and strong jobs. You look at the Fed having really high interest rates. This upswing in inflation may inadvertently and very unhelpfully, adversely affect stability, including currency stability, macro stability, capital flow stability, and that would put central banks in a very difficult scenario, particularly in EM Asia and elsewhere, thinking, do we need to hike now just to make sure we've got stability in the currency and macro stability and financial flows, which may be equally important because these can lead to economic pain eventually. So we are in a very unenviable situation. But I want to take a step back and say that, at the end of the day, what we end up with is a very schizophrenic September. Why schizophrenic? Because of what the things we were discussing. On some days, it will be really gloomy. Inflation is high, dollar is strong. This is going to take a toll. So assets, currencies in the region all take a step back. On other days, you get China coming out and saying, and because they really need the stimulus. So the backdrop of this is bad news in China, but they unleashing stimulus that then unleashes the bulls in the market and saying that, hang on, China has just eased policy, and so they grasp straws and take any excuse to rally. So that's what September might be marked by. As we go to the Mooncake Festival towards the end of the month, we would all want to have our cake and eat it, but some of these things are moonshots. So this is the real problem and the challenges for us in September.
Now it's Monday. What are the Vishnu? What are the key things that we should be looking at this week that potentially could move markets in the short run?
I mean, we've got a plethora of things to look out for. I think markets will be looking out for unscheduled, but perhaps incoming China stimulus announcements. I think speculation about this has increased after some news wires reported that presidency is under pressure for how the economy is flailing. That's certainly something worth keeping an eye out for. For us, ECB, because of the big and potentially large impact it could have in the euro and indirectly the dollar, and that cascades down onto risk sentiments and yields, that is a big watch factor for us on Thursday. So the ECB meeting, especially against the context of a huge surge in gas prices, the baseline is for the ECB not to do anything, allude to the fact that there's higher uncertainty, and so having a certain humility about downside risks. But exactly how they phrase their communication about downside risks to growth and uncertainty, I think can have a huge impact on market outcomes. So certainly that's one of the key events on the global stage that's worth watching. We have a plethora of China data coming out. There can be some soft points. Perversely, in some cases, bad news may be good news if they spin this into incoming stimulus. So that would also be interesting to watch. For us in particular, I think we keep an eye out for the closer to our part of the world. A lot of the inflation data coming out in August has already surprised to the upside in Asia. So we've got India's inflation data coming out as well. And why India is worth watching this time is not only because of the dilemma it poses to the RBI and the rupee, but if food inflation is exceptionally high, we cannot rule out further exports restrictions from India on food, which would then have an impact on the rest of Asia as well. So these things are worth watching this week.
And on that note, Vishnu, thank you very much for your insights. Thanks for coming on the show.
Always my pleasure, Brian. Thanks for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy for Mizuho Bank on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this interview on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.